Hi everyone, it's Crystal Schulz with Pinnacle Lending, and I am here with my team leader, Casey DeCesare, ready to ask him a very important question of news that we just got. Casey, what does it mean now that Freddie and Fannie have announced that they will go ahead and buy loans in immediate forbearance?
Well, it means a lot of good, important things. Over the last 2 or 3 weeks, there's been kind of liquidity problems, and the big strain on the industry has been what happens if a loan goes into forbearance? What happens to that servicer? Servicers are required to pay the investor who made the mortgage loan, regardless if clients pay or not. So now that there is liquidity and facilities that are going to be set up by the federal government to not only buy Fannie and Freddie loans, but also to provide liquidity for the servicers to where when they're not paid on a loan that's in forbearance, they're still made whole, so to speak. So I think that is huge news that came out. Some of it came out this morning, some came out yesterday as far as the servicers. But that right there is a step in the right direction. Mm-hmm. If we can get the Fed now to stop buying so many billions of dollars of mortgage-backed securities on the daily basis, it'll actually even be better, prove to be better, for the situation.
Right. More stability in the market.
Correct. I mean, obviously, what actually is being done in the last 2 or 3 weeks since COVID-19 became a really big issue, which I believe was on March 9th. What's been done in the last 2 weeks has been epic. It's been paramount as to kind of how they've helped out. Yeah, it's been a rocky road, and a lot of fellow originators are feeling the pains and the strains, but still, the way they're working themselves through it is fast and efficient, and I'm pretty proud of it.
Right. Awesome. Okay, good. So good news for the mortgage market.
Rates too should be actually coming down a little bit here in the future.
Right. Well, we've definitely seen some stabilization from that week of March 9th, and then the following 2 weeks where we really plummeted and lost products and all that. We've seen some things come back. What do you think about the non-QM lenders kind of re-entering the market?
Well, I mean, we love non-QM, and we have great investors within that space. The majority of them may have a tough time coming back, but the real good ones are either have come back this week or last week, or they will come back into the marketplace. I think you're going to see lower LTVs, so it's going to require more skin in the game for down payment or equity, whether you're doing a purchase or a refi. I think you can't avoid that.
Right.
So, I mean, obviously the way they lower their risk is to go ahead and get more skin in the game from the borrowers, which they'll do. Right. I still think the products will be there. They'll be in the same scope as what they were, but you're going to need more money now.
More money down, slightly higher credit scores. I saw a new overlay coming out, a little higher credit.
I would say the interest rate's going to be a little bit higher too, because there's more layers of risk on that deal than there was ever before.
Right. Okay, and one last question for Casey today. What do you think about people going ahead and cashing in, taking cash out equity right now?
The way I've always thought about it since I got in the business back in 1994, if you need cash and you want to access your equity, by all means, it's a great time to do it. Right. We're doing cash out refis in the 3s, which is fantastic, and obviously it converts over to tax deductible debt most of the time. You have to consult your CPA or tax preparer. But yeah, I think it's a great time to do it. I don't think Nevadans should be very worried about crashing home prices. I keep hearing housing crash. This week has been quite the contrary on that. We haven't really seen it, and the numbers would suggest that housing pricing is going to stay within a certain range as far as what they're doing. I'm not worried about my houses going down, and I don't think that my fellow Nevadans should worry too much about anything crashing as well.
Right. Well, we were expecting a little bit of a stabilization in the market, so this is just a slight maybe correction that we would have seen anyhow, and I don't think that we're going to see a huge crash either, so that's great, and I have several borrowers with confidence going for those cash out refis, so that's really reassuring.
Yeah, it's a good thing.
Yeah, awesome. Okay, well, thank you, Casey.
Thanks for having me.